looking at 2023 now, this chart shows the S&P 500. The last 4 times, so the only 4 times over the last 90 years in which the S&P 500 had a worse year than this past year. Again, you have the Great Depression, 1974, the tech bubble, and the Great Financial Crisis. And you can see the dark blue line is the drawdown, and then the lighter blue line is the following year performance of the S&P 500. So, 1937, you were down 38%. The next year, you're up 24. 74 down 29, up 31. 2002 down 23, up 26. Even the Great Financial Crisis down 38.5%. Next year, you're up 29.5. So typically when you have these really bad markets, you can not expect, but you will run into situations where you see some pretty big rallies in the next year. So hopefully 2023 fares a little bit better from the equity standpoint. So now we're going to jump into what's currently happening in 2023. So in 2022, it was really dominated by value, dividend growers, quality companies, and even international towards the end of the year. So far this year, that script has flipped just a little bit. You're starting to see, small caps, which is that magenta color, up 7.51. You're seeing the Spider MSCI ACWI, which is the international stocks, up 9% so far year to date. I mean, we're 26 days in. And then from the US equity side, the large equity side, you're seeing growth starting to lead. So you're starting to see some of these more tech companies, Amazon, Apple's, they're starting to bounce a little bit. And then, we're still positive across the value spectrum. The S&P 500 is still up 4.69, but it's starting off a little bit different than it was for all of 2022. Yeah. So one of the main things that is a concern in 2023 is corporate earnings. A lot of people are worried that with the Fed holding their interest rates as high as they are, and their plan to hold them higher for longer, it might affect corporate earnings. And as Casey kind of led into earlier, corporate earnings falling doesn't necessarily mean that stock prices are falling. So this chart essentially shows a dot plot of situations in which earnings have fallen, but the S&P 500 is still positive. So on this chart, the bottom, the horizontal axis is the 12-month trailing year-over-year earnings per share. And the vertical axis is the S&P 500 price performance. So as you can see in that upper left quadrant, which could potentially be 2023, you have a scenario in which earnings are falling, but the total return price of the S&P 500 is still positive. So bad earnings falling might not necessarily be a bad thing for the S&P 500 in 2023. So, and we also want to take a little bit look at a technical analysis of the S&P 500 right now. So this chart goes back about a year and a half, which covers pretty much this whole market cycle that encapsulated all of 2022. As you can see, there's a very dark black trend line that has emerged. The price would go up, touch this trend line, and it would be an almost immediate reversal every single time. Very aggressive reversals off this very respected resistance line and trend line. But recently, over the last few days, we actually, for the first time in this whole entire cycle, broke above this trend line, which to me is a very, very positive sign that the environment is shifting a little bit. Another thing to pay attention on this chart is the moving averages. So we have the 200-day moving average, we have the 100-day moving average, and the 50-day moving average. And the moving averages are just trend lines that try to give you an idea of what price has been doing over the last 50 days, 100 days, and 200 days. As you can see, in the bottom right there, the stock price of the S&P 500, the index price, is above all three of those moving averages, which is a positive sign. And you're also starting to see the slope of these moving averages move up. In an ideal environment, you want all three of those averages sloping upwards, and you want the stock price to be above it. So right now we're in a situation where we could potentially be looking at a breakout from this downtrend, and we are holding above the moving averages, which can act as a pretty strong support. So 2023 is off to a very good start, I'd say, so far.
I like it, Dan. Again, onward, upward. So now let's focus a little bit on economic data. So the labor market continues to be strong. I mean, I think that's the best word.